Welcome to Plus and Minus Software. This video shows you consolidating financial statements, intercompany worksheet, parent company purchases, expenses, and subsidiaries. We're running the demo on the Microsoft Azure Cloud. What is headquarters accounting? A company or a department that handles payroll, expenses incurred on behalf of subsidiaries, cash, asset, and liability transfers among headquarters and subsidiaries, allocations, consolidating financial statements, intercompany account reconciliations, and import-export transactions from two subsidiaries. Intercompany accounting can be intimidating because of all the variables. However, the concept is very simple. When intercompany accounts receivable and accounts payable are consolidated, they should balance to zero. Modular-based systems require the user to enter intercompany transactions separately in each company, a one-to-one relationship, which can lead to out-of-balance conditions in the intercompany accounts. Plus and minus supports one-to-many relationships. Additionally, plus and minus allows the parent to generate intercompany transactions among subsidiaries top-down, or the subsidiaries to generate intercompany transactions bottom-up. The bottom-up is used primarily to transfer cash from subsidiaries up to the parent. All intercompany transactions route through one intercompany gen account. The intercompany gen account must be the same in all companies. The demo uses account 3130 ARAP Intercompany. Please note the parent company database is named top. Let's start at the top. Go to Report Financial Statement. We're going to use preset Cash ARAP Intercompany, which is preset number 6. We activate the Gen Chart Select routine to show us key accounts, which is done right here in this section. These key accounts will also include 3130, the intercompany gen account. So let's run the consolidating financial statement. Click Report, and here it is. The 3130 intercompany account total is 0. Let's make a note that Company 1 has $9,400 in cash and Company 2 has $2,600 in cash. Please remember we've turned the sign flip off, so debits are debits and credits are credits. It's easier to talk about the balances in intercompany when you keep that in the back of your mind. So let's enter an intercompany transaction. We're going to go to Worksheet Intercompany and select Preset Top to Company 1 and Company 2. This is preset number 1. The worksheet divides into 3 groups. We have the top company. This is the intercompany sub is 0. This is the host. Company 2, and then there's Company 1 as a second group, and Company 2 is the third group. We're transferring $100,000 from top to Companies 1 and 2. Company 1, number 1 receives $60,000, and Company 2 receives $40,000. Let's zero the worksheet so we'll show you how the calc routine works. This calc ratio over here is a division order ratio, and what it does, we can go click calc up at the top. We can put $100,000 right here. Click spread, and it'll spread this out to all the accounts. Typically, this ratio is used primarily to transfer cash from one account to another, so it's a simple debit and credit relationship. Let's click tally. Tally shows that all the debits and credits are equal. It also shows that the total by company equals 0 and that by company equals 0. So these two columns must equal 0 in order to have a record. This routine is checked when right before you issue record, and if it's not equal to 0, you'll get an error message. So let's record the intercompany. We'll click record. We want to use the current date, and all this is preset and ready to go. Let's click start. Click OK. It has just recorded all the intercompany transactions into the parent as well as the two subsidiaries. Let's go into Top's entry edit right here. So what we're going to see is the transactions. We've got a credit to cash of $100,000. We've got a debit to accounts receivable of $60,000 on Company 1, and we've got a debit to accounts receivable intercompany of $40,000 on Company 2. Let's go to Company number 1. We'll navigate here, show you how we do a navigate. Go to Company 1, click Start. That throws us into the Company 1 database. Let's go into their entry edit. You'll see that we've got a $60,000 debit to cash, and we've got a credit to accounts receivable. Actually, in this case, accounts payable intercompany 77,000, which is the parent. And we'll go to Company 2 and take a look at it, and it's got a $40,000 debit to cash, and we've got a $40,000 credit to accounts payable parent of $40,000. So the intercompany account should equal 0. So we return to top. We're going to go to report financial statement, which is right here, and we're going to use preset cash AR AP intercompany. We'll select the current month, which is already done, and we will show you the transactions. We're going to select preset number 5, consolidations, the current month. Let's click report, and you'll see that we've transferred $60,000 went to into the cash account for company 1, 40,000 for company 2, and the intercompany accounts are all basically the offset entries from the cash entries. Fairly simple transaction here, except it's recorded over 3 companies. Let's record a little more complicated transaction. We've got a tax advisory services invoice of $6,000. Top is purchasing tax advisory services and wants to expense $1,000 to top, $2,000 to company number 1, and $3,000 to company number 2. Let's go to the purchase service invoice writer, and here we'll see the $60,000 payable to the tax advisory service. Row 1, which is $1,000, has an intercompany sub of 0. This 0 means we're going to record this in the host company, which we're in right now, which is top. The $2,000 will go to company 1, and that's subsidiary number 77001. That's the sub number. And then company 2, the $3,000 will be recorded into company 2. We're going to use the current date, which is right here. We're going to click record, and it's now recorded in all 3 companies. Let's show you what the transaction looks like in entry edit. This is journal 20, which is a purchase. Accounts payable trade, $6,000. That's the payable set up to be paid to the vendor. We've got $1,000. 6815 is tax advisory services expense account. It gets $1,000. And then the $2,000 to company 2 goes into their accounts receivable intercompany account. Same is true for company 2, $3,000. We're in company 1's books. Let's take a look at its entry edit. Same thing. Here's journal 20. We were expensing $2,000 to 6815, and then in this account, the intercompany account, this is accounts payable, we'll have a credit to the intercompany account, and this is charged back to the parent, which is 77000. And then we've navigated over to company 2. We'll look at their entry edit. This is their purchase invoice. You'll see that we've expensed $3,000 in 6815, and the intercompany account got a credit of $3,000. So we're back to Top's books. Let's go to the financial statement. We're going to use preset number 5. It's set up for the month of September. This is the only transaction we'll see is what we put in. We are consolidating top company 1 and company 2. Let's report this guy, and here's the transactions. The intercompany account for top shows a receivable of $105,000 down here. Remember, we recorded 2 intercompany transactions. The transfer of $100,000 cash, that's the cash sitting up here. $60,000 went to company 1, $40,000 went to company 2. And then we've expensed tax advisory services to company number 1, and $2,000 went to company number 1, $3,000 went to company number 2. If we go down here to the P&L, we'll see $1,000 is expense to top, $2,000 was expensed to company 1, and $3,000 was expensed to number 2. So that ends our consolidation demonstration. There's a lot of other routines in here for allocation of intercompany, reconciliation of intercompany, clearing accounts which will cross over multiple companies. Anyway, thank you for watching this video, and have a good day.